Welcome to the first RiSKi Business podcast. I'm Chuck Adam, a founding partner of Meritage Wealth Insurance Advisors, an independent insurance consultancy and brokerage firm serving a select group of financial professionals and their clients. I was hoping to be joined by a special guest, but turns out he's unavailable, flying around, jumping out of airplanes, that sort of stuff. So I'm going to take his place. People tell me they can't see any resemblance. It's so disappointing. However, I'm delighted to be joined by a good friend and colleague, Bob Finder. Bob's background and experience is impressive. He's practiced estate planning and tax law. He ran 2 regional trust companies. As an investment consultant, he had a prolific track record of helping advisors win and retain major high net worth and institutional relationships. But what Bob may be best known for is his passion and expertise in personal communication skill building. Personal communication, it's the one true differentiator in our industry and the cornerstone of all successful financial relationships. I chose Bob to do this podcast with me for exactly this reason. The right kind of communication is the primary ingredient in advisors who consistently invite me and my team to help their best clients address the issues that most concern them. What advisors say, how they communicate, creates all the opportunity to help. Bob has spent decades helping advisors learn to communicate effectively. Bob, welcome to RiSKi Business. Please tell us why you believe personal communication is so important.
Chuck, it's a pleasure to be with you. And before I do so, I just want to say that you and I have known each other for many years, and you've helped me personally with my insurance needs that I'm embarrassed to say I never really gave the amount of thought and attention to that I should have until you and I had those important discussions. So I want to thank you for that. And I also just want to say, I know how much you care, because I've witnessed it. You care about the advisors you serve and their clients, and your focus on not just selling insurance, but helping advisors improve their practices and reach their full potential. And that's why I'm so delighted that you've asked me to join you for these podcasts.
Thanks, Bob. Very nice of you to say that.
With respect to your question, advisors are given abundant resources, research capabilities, solution sets to help clients achieve almost any financial need, and technology to drive efficiencies and deliver better investment performance, and that's all well and good. But I'm concerned that advisors are starting to get mesmerized by fintech, and they're minimizing the importance of soft skills, personal communication, which you and I know are anything but soft, like the ability to relate to and connect with people, to listen and understand a client's feelings and emotions, and to effectively influence them to make better financial decisions.
But so many of those resources end up acting as a crutch. You would think they would be a blessing, and they can be if they're properly utilized. But in many cases, they're a crutch that allow the advisor to ignore, like you said, the soft skills.
You know, I think we both agree that advisors run the risk of losing their identity in the process, allowing their firms or competitors to frame their role in a much too restrictive and limited manner. And even for the most experienced financial advisors, what they say about themselves matters, whether it's in person, in print, or digitally. And with prospects, it's their chance, maybe their only chance, to make a solid, positive impression. And with existing clients, it's an opportunity to remind them that they do so much more than just manage investments. Advisors shouldn't let other people define what they do based on past experiences or stereotypes or misperceptions.
We forget this. Clients need to be reminded. We can't remind clients often enough. Give me an example of what you mean about the restrictive and limited manner in which advisors frame their role.
Well, you and I both do a lot of work with a firm where, oh gosh, about 60%, maybe higher, 60% of their thousands of advisors all represent themselves on their websites and in written materials using this generic language, which I want to read to you. Here's what they write about themselves, post on their websites and their printed materials. It says this: as a financial advisor, I can deliver a full range of investment planning strategies tailored to your unique needs. Whether you're investing for retirement, education expenses, or some other goal, I will help you make informed decisions about your investment strategy. And Chuck, just for good measure, they do add, you have access to additional resources, including trust and estate services, insurance products, and much more.
Bob, can you say all of that again? I was falling asleep. I'm sorry. But in all seriousness, it really says access to insurance products. That's amazing. I don't think advisors have many clients asking them to see what insurance products they need. And in fact, with a description like that, do clients even expect their advisors to discuss or incorporate insurance into their financial plans?
Exactly. Because Chuck, if clients don't expect it, or if they're not even aware of it, a lot of advisors will simply not address the subject, which hurts not only their practice, but more importantly, their clients, who may be unprotected or inadequately protected insurance-wise.
Bob, I know you urge advisors, and I think this dovetails with the droll and boring website that you just read. But I know you urge advisors to adopt a stronger value proposition. And it's one that goes beyond investments, and it addresses the advice and the guidance they provide in wealth management. I was sharing with you recently, and I wanted to reiterate for today's podcast, an advisor you and I both know well. He's been a friend of both of ours for a long time. He went through your program at the firm where the three of us worked together for a long time. And he now is approaching $1 billion under management. He's got a team of 8 people, and they do many millions of dollars of production. And I was talking to him recently, and he told me, I didn't ask him this, he just volunteered this. He told me that when he went through your program, you helped him develop a value proposition. And he said it was great. The value proposition certainly helped him be succinct in terms of communicating the value he added to his clients and prospective clients and even his team. He said, though, what was more important, what was transformational is the idea that when you helped him develop the transformation or the value proposition, it changed him on the inside. It gave him a belief about what he did and how he added value and the impact he had on the families he helped. It gave him a belief that it mattered, and it created momentum, he said, that to this day continues to build. So he attributed that value proposition with being the transformational element in his practice.
Well, and Chuck, it's not complicated. The beauty of it is that it revolves around 5 key words, which define the essence of what an advisor should do. Those 5 words are build, manage, protect, and transition wealth. And put together in any number of forms, it might sound something like this. I work with a select group of clients, helping them build, manage, protect, and transition their wealth. Or my team and I work with a select group of clients, helping them build, manage, and protect their wealth. And we're there for our clients throughout life's transitions, planned and unplanned. You see, there are numerous iterations, but they all incorporate those 5 key concepts: building, managing, protecting wealth, and being there throughout life's transitions.
Bob, 5 key words that are so important that goes back to what I was saying just a few moments ago about the advisor who built nearly $1 billion practice. He's doing, a few $1 million of production. Those 5 key words created something in him internally from a confidence standpoint, from a belief standpoint, from a conviction standpoint, that was magic when it came to building his practice. Bob, what else should advisors make clear to their clients?
Well, it's really important to clarify what they mean by the term wealth, because it's so much more than just investments. I like to refer to it as the 4 cornerstones of wealth, which include all aspects of investment management, but also financing and liability management, non-portfolio risk management using insurance and other asset protection strategies, and trust, estate planning, and fiduciary services. Those are the 4 cornerstones of wealth that encompass any financial need that a client could have.
Yeah, everything that they need falls within one of those cornerstones. Everything the firm offers falls within one of those cornerstones. And as we go through this podcast, Bob, and we do other sessions, we're going to incorporate those concepts consistently and help advisors understand how widely applicable they are. Bob, by advisors describing themselves in this manner, you could see how they'll be conveying a much greater breadth and depth to their practice and making it easier for clients to understand their ability to help them with all their financial needs and not just their investments. After all, they're advisors, and advisors implies a broad approach to helping clients. When I visualize the 4 cornerstones of wealth, I see so many ways in life insurance, long-term care insurance, a multitude of other asset protection strategies and supplemental income solutions could come into play in one of these areas. And I know we're just scratching the surface. What are some of the other frameworks that we can share with advisors to address non-portfolio risk solutions with their clients in our next RiSKi Business program?
Well, Chuck, let's discuss a couple of great ways where advisors can initiate conversations with clients about insurance using 2 concepts. One I call IEGR, which is an acronym to help advisors share their thoughts and insights about the markets and the economy, which is what the I, the E, and G represent, but to focus on what they really can help clients manage, and that's the R. And the R stands for risk. And advisors are in the business of helping clients manage portfolio risk, behavioral risks, non-portfolio risks, and communication risks. The other framework I want us to discuss is something called low P, high C. Low P is that low probability of bad things happening, so why should I need insurance? But the high C relates to the high consequences, financial, emotional, and physical, if those bad things do happen and people don't have the adequate insurance coverage.
Yeah, Bob, you are incredibly consistent about your IEGR newsletter. I read it every Monday morning. It's a staple of the way I start my week. And it's interesting and important to me because every single week, and what I'm going to say next might make some people be uncomfortable or shift around in their seat as they listen to this. But every week I'm involved in client meetings with advisors, and the client will ask the advisor, how are things going? Tell me about the market. And what ensues next is a rambling mess. It is an incoherent thought process without really any advanced preparation. There's no discussion of risk. Your IEGR, interest rates, equities, global risk, it makes succinct and understandable what every client wants to hear. And the idea that you discuss risk, I tell advisors constantly, this is a weekly part of my conversation with advisors. And this relates to what you said about low probability, low P, high cost, high C, low P, high C. The risk part of that equation is what they do. That's the way they add value. They can't control interest rates. They can't control equities. They can't control the global geopolitical climate or the global economies outside of the U.S. What they can control is risk. And understanding that is, I believe, central to a sound financial practice because it causes them to address things that go, as you've said already on multiple occasions, well beyond the idea of just addressing investments with their clients. Bob, that's a deal. We'll look forward to hearing more about low P, high C, IEGR. Thanks for joining us for RiSKi Business. If you'd like more information about anything we conveyed in the program, or if you have any non-portfolio risk management issues you'd like to speak about, here's our contact information. Please don't hesitate to reach out to us. And remember to be careful because it's risky out there.